Good morning, good afternoon, and good evening to you, wherever you might happen to be in the world today. Welcome to this webinar on the second comprehensive review of the IFRS for SMEs Standard. My name is Daryl Scott. I'm an ISB board member with a particular passion for SME accounting. And I'm joined today by Michelle Sampson and Yusuf Hansi, both members of the ISB technical staff and both of whom share my passion for SMEs. Before we begin, I just wanted to quickly remind you that we previously pre-recorded and published 3 webcasts on the same topic that we'll be discussing today that are available for download from our website. Today's webinar is different though, in that because it is live, you'll be able to have the opportunity to ask us questions through the session. Before I then go on to talk about the slide, the presentation itself, I'd like to just cover off on a couple of housekeeping issues. The first is that the optional response document, the request for information, and the slides used in this webinar are available on our website on the address that you can see on screen now. And so you'll be able to download all of that information if you want the information to back you up on some of the specific topics that we discussed this afternoon. Next, as always, just a reminder that the views expressed in today's webinar are those of Yusuf, Michelle, and myself, and do not necessarily reflect those of the board or the IFRS Foundation. And then finally, just in terms of the actual question process, if you have a look on your screen, you should have a box that you can actually, a designated question box that you can open, type in your question, and then press submit. You can do this throughout the presentation, but we will get to the questions and deal with the questions at the end of the discussion. And with that, I'd like to just take us into the content slide. So if you can see from this particular slide, you'll see that firstly, we'll be running you through a little bit of a background of the SME Standard and an overview of this particular comprehensive review. We'll then dive into a little bit more detail to discuss each of the sections of the comprehensive review. And finally, we'll finish up by talking about how you can respond to the review, how you can provide us with your comments and views on the comprehensive review. When you download the presentation pack, you will see an appendix that contains additional slides that deal more specifically with some of the particular elements of the amendments that the board is considering for IFRS for SMEs. That additional information is available in the presentation pack and is referenced here in the content slide, but we won't actually be talking about it during the session today. And with that, I think I'm going to bounce straight into the presentation. I'm going to hand over to Yusuf, who will take you through the background to the IFRS SME Standard. Yusuf.
Thank you, Daryl. Let's begin with a brief overview of the IFRS for SMEs Standard before Daryl and Michelle talk very specifically about the request for information. The IFRS Foundation has completed profiles for 166 jurisdictions, and 86 of those jurisdictions are roughly the jurisdictions that require or permit the use of the IFRS for SMEs Standard. As you can see on this map, the standard is widely used in South America and Africa, and more broadly used in the Asia-Oceania region. However, I think it's worth to say this map significantly underestimates the use of the standard. This is because we have found that many jurisdictions use the standard to help them develop their own local accounting standards. For example, many jurisdictions in Europe have chosen to apply their national standards for small companies, but what they set out sometimes is an inadvertent process of converging with IFRS for SMEs. So it's very hard to see how many entities have chosen to formally require IFRS for SMEs standard and how many may informally require it or copying the standard. You can also look for further information about the jurisdictions applying the standard on our website under the Jurisdiction Profiles section. Let's move on and look at how the standard has developed over time. The IFRS Foundation first supported the IASB's effort to develop a standard for SMEs and emerging markets back in 2002. And then in 2004, the board issued the first discussion paper inviting comments on whether the board should develop an SME standard and what that standard should look like. Based on the feedback to that discussion paper, which supported the board and was supported by national standard setters, an exposure draft was issued in 2007, and the standard was published in July 2009. Unlike other standards, it became effective immediately. In 2010, the board established the SME Implementation Group, the SMIG. The SMIG is an advisory body to the board, and it is a very important group for the IFRS for SMEs standard. In July this year, 21 new members and 1 observer were appointed to the SMIG, and the SMIG terms of reference has been updated. You can see this information on the SMIG webpage on our website. The SMIG is a broad group of members who are brought together with different backgrounds in the SME world, and it works to support the international adoption, implementation, and application of the IFRS for SMEs. Its responsibilities include considering the need to update the standard and considering application questions that could require educational materials. The SMIG issues what is called Q&A, which explain how to apply the standard in the circumstances that are questioned. The board began its first comprehensive review in 2012 and issued amendments to the standard in 2015. However, in 2012, many of the new IFRS standards that the IASB had issued had only recently been implemented, and there was little experience of those standards. And secondly, the IFRS for SMEs has only recently been implemented in many jurisdictions at that time. So the board decided to make only limited amendments, and the 3 most significant amendments were: first, permitting SME to use a revaluation model for property, plant, and equipment; second, aligning the main recognition and measurement requirements for deferred tax with IAS 12; third, aligning the main recognition and measurement requirements for exploration and evaluation assets with IFRS 6, exploration for and evaluation of mineral resources, to ensure that the IFRS for SMEs provides the same relief as full IFRS standard for these activities. In 2019, we began our second comprehensive review, which will be the focus of today's webinar. So what is the IFRS for SMEs? For those who are not very close to it, it's a good financial reporting made simple. It's 6 times smaller than full IFRS. It is the entirety of what you need in order to understand accounting for SMEs, and you never need to pick up the full IFRS standards to answer a question. The IFRS for SMEs uses the terminology SME. The implication of this is that it is intended only for small and medium-sized entities. But the mindset that the board has applied in developing the standard places more emphasis on its suitability to entities that do not have public accountability. We don't worry too much about size. We don't actually have a criteria for size in the standard because size is not an important aspect in this context of financial statements. In the IFRS for SMEs, an entity has public accountability if either its debt or equity instruments are traded in a public market, that is a listed company, or it holds assets in a fiduciary capacity, such as banks, credit unions, insurance companies. The IFRS for SMEs was originally drafted to provide a simplified, self-contained set of accounting principles based on full IFRS standard. The standard was developed to meet the needs of smaller, non-listed entities and contained modifications to reflect the needs of users of SMEs financial statements and cost-benefit considerations. Before I hand over to Michelle, let me highlight different resources on our website that you can use to further understand the IFRS for SMEs if you are looking for additional information. The board recognizes the importance of the standard, and we have a whole host of resources available on our website. You can find guidance on how to apply the IFRS for SME standard to micro entities. This guide includes only those requirements of the IFRS for SMEs that are likely to be applicable to a typical micro entity. We will discuss updating this guidance as part of phase 2 of the comprehensive review. Also on our website is further information about the SMEC, including who are the members. So you can identify members of that group from your region, and you can access the Q&A that the SMEC has published. We also have a fact sheet, which is a short summary and a brief overview of the standard, and there are a number of presentations. More importantly, the IFRS Foundation has developed standalone modules, one for each section of the 2015 version of the IFRS for SMEs. Each module reproduces the requirements of the standard with added notes and examples. They discuss the significant estimates and other judgments likely to be made in applying those requirements, and they include a comparison with full IFRS standards. In addition, at the end of each module, there are questions together with solutions to test your knowledge of the standard. So, for example, we have received a question about addressing going concern in the current difficult circumstances, and Module 3, Financial Statement Presentation, it contains notes and examples on applying paragraph 3.8 and 3.9 of the standard on going concern. The examples are around when going concern assumption is not appropriate or when there are material uncertainties. Now I will pass over to my colleague Michelle, who will provide you an overview of the second comprehensive review.
Thank you, Yusuf, for that overview of the standard. And as I said, I will just provide a very quick overview of this second comprehensive review. So the review started in early 2019, which was when I joined the team, although I have been working with the standard since about 2010. And we started out by consulting a number of our groups about the scope of the standards. So we spoke to our emerging economies group about what should be included in the scope of the review. We spent some time talking and thinking about the definition of an SME, and we spoke to national standard setters and the advisory council on that. We consulted with our SME group, the SMEs group, considerably during the course of this first phase of the review. And finally, we had lots of discussions with the board, and it was a bit of a wobbly start to begin with our discussions with the board, as we really needed to set out the scope of the review and also set a framework for the review. And I think that was quite interesting because those initial discussions really highlighted the board's interest in this topic, and we had some very useful discussion. So from the start of 2019 to January 2020, when we published the request for information, that was really what took us the time and the activities we were involved in. In the second quarter of this year, we have published a survey which is available online, and Yusuf is going to explain to you later a bit more about how you can respond to the RFI. But we have provided an online survey in addition to our normal comment letter to try and encourage responses to the RFI, and recognising that the SME group has more resource challenges than when we're talking to groups that are involved with our full IFRS standards. And that was also the reason that we have made available, or can make available, a survey that is focused on getting input from users. We spent some time designing a very short survey that talks about the future direction of the standard, and then really ask questions about user of SMEs needs. And that is available if you are a user, and it's available on request. And then we are just about 2 months away from our comment deadline. So we extended the comment deadline in light of the COVID-19 situation. So we are in our final rounds of discussions and hoping that this webinar and the other materials that Yusuf has highlighted to you, which are available on the website, can help you to respond. The next part will be when we start redeliberating the feedback. So our current hope or plan is that we will take to the board in December of this year an overview of what we have heard in the outreach and the comment letters and the responses to the surveys. And we will present that to the board, and we will also be asking the board for some direction as to how we will and what questions we will ask our SMEs group. And we will meet with our SMEs group in probably January and February of 2021. And after we've met with them and discussed the feedback and analysed the comments we've received, we will go back to the board probably at the end of Q1 2021 to discuss the second phase of the review. So just in terms of the review, we are now at the end of the first phase of the review, and we have published the request for information where we're seeking feedback on whether and how to align the IFRS for SME standards with full IFRS standards. Now, in phase one of the review, you'll notice that the questions in the RFI are really structured around three particular questions. The first question is, should the board align? So should we take a standard and that's in full IFRS standards and align the IFRS for SME standard? Or in circumstances where the board is saying, actually, we've looked at that standard and we feel that it would be best to leave the IFRS standard unchanged. So what are your views? What information do you have if we leave that the IFRS for SME standard unchanged? And then a third question is whether the board has considered it needs further information. So it is just reaching out and saying, what are your views on this? So the answers to these questions will help us in the second stage of this review. The second phase will be about analysing that feedback. And only then will the board decide whether to make amendments to the IFRS for SME standard. And if the board does decide to propose amendments to the IFRS for SME standard, it will issue an exposure draft. And then based on feedback to that exposure draft, would the board then issue or make final amendments to the standard. So how have we structured the request for information? As I said, when we started the initial discussions with the board in early 2019, it was a bit of a wobbly start because we kind of thought, well, we'll just go in and we'll talk to the board about alignment. But some of the board members had different views on whether we should align and how we should align. So we had to come up with a framework for the review. And in a moment, Daryl's going to provide you with an overview of that framework. So the first part actually is seeking views on that framework that the board has used for the review. And then in the second part, we've actually taken the new and amended IFRS standards and we've applied that framework to those standards. And I'll try and provide a short overview of how we applied that framework to the standards within the scope of the review. And then the final part of the request for information sets out new topics and addresses other matters. So these are things like cryptocurrencies, and Yusuf will take you through these. But importantly, this part also provides you with an opportunity to raise any other points you think would be useful to raise with the board. So as I said, I'm going to now hand over to Daryl, who is going to provide you with an overview of Part A of the request for information. Thank you.
Thank you, Michelle. For those of you unfamiliar with IFRS and ISB jargon, a bit of a wobbly is a suggestion that what essentially happened was we went off the rails a little bit at the beginning of the process. And we did that because the staff in starting us along this particular path had used previous decisions that the board had taken to construct a strategy and construct a path forward based on those previous thought processes. But one of the strengths of the board is the fact that we have regular board level turnover, which is part of our overall process. And that turnover meant that when the board sat down to look at this, we had a number of board members who were new to the process and new to the decisions that had been taken. And from their perspective, they felt it was really important that we understood why we were going down a particular path, and hence the bit of a wobbly. It was also important from an ISB perspective, having realized that we needed to rethink or reimagine or make ourselves comfortable again with the strategy, that we did this at the beginning of the process. And so that was necessary so that in proceeding forward from that point in time, we knew, as we made other decisions on the request for information, what our broad strategy was and general framework was for the review. And I think that's important for you as constituents too, because as you now work your way through the RFI, it's going to be important to start by thinking in this Part A section what you believe the appropriate strategy is and how you believe the board should take the process forward. As we started thinking about strategy, we conceptualized in our own minds that there were two possible approaches that we could take to the second comprehensive review. Both of the approaches had and have merit. Both of them have certain shortfalls that we need to consider. The first approach, the one that you see on your screen now, would look at full IFRS as a starting point. Essentially, this is a mini-me approach, if you like, to IFRS for SMEs. And what we'd be doing is we'd be using changes in full IFRS to trigger the consideration of possible consequential changes to IFRS for SMEs. The obvious advantage to using this approach would be that we'd be able to use the extensive work, the resources, the research activities, the outreach, presentations and the like that have already occurred at a full IFRS level to drive the consideration of where and how we needed to make amendments to IFRS for SMEs. This approach also accepts that at the heart, the accounting principles in IFRS for SMEs should have the same starting point as those for full IFRS. And it accepts that there is a valid perception, if you like, of alignment created by the name. So the term IFRS for SMEs, with the emphasis on IFRS, is portraying to the world a certain starting point for the IFRS for SMEs and a certain level of alignment between full IFRS and IFRS for SMEs. On the other side of the equation, we have what we term the independent standard approach. This approach would essentially start each comprehensive review of the IFRS for SMEs with a blank piece of paper. And we would therefore only consider changes brought to our attention by stakeholders of the IFRS for SMEs accounting approach. Now, this has the benefit of being very responsive and perhaps only responsive to the needs of SMEs. So it's driven entirely from the SME side of the equation. But from the board perspective, our difficulty here is require considerably more effort and resources from our SME constituents. There would be far more involvement in the outreach processes, far more involvement in research and academic input into the process, and far more outreach in order to initiate changes at the SME space. And we believe this would be very duplicative of the work that's already been done at the full IFRS level, and therefore likely to be pretty inefficient. And finally, ultimately, this could lead to IFRS for SMEs diverging from full IFRS without good reason. And I think one of the concerns the board had as we discussed these two approaches was that eventually that could lead to an understanding gap for those who believe that IFRS for SMEs should at some level be comparable with the full IFRS standard. So in the discussion we had about these two approaches at board level, we also noted that the two approaches are not mutually exclusive and that it's possible for us to agree to an approach that contains elements of both. And so in the RFI, the board is proposing to use the simplified IFRS approach as a starting point, but to allow and consider robustly throughout the process whether or not we need to make modifications to that simplified IFRS number or the simplified IFRS outcome. So we believe that the change to full IFRS does provide us with a robust and appropriate trigger for thinking about changes to IFRS for SMEs. But at the same time, we believe it's imperative that we also fully and equally robustly consider the needs, capacity, and resources of SMEs, as well as bearing in mind always what the original objective of the IFRS for SMEs standard was. So there's a little bit of a on the one hand, but on the other hand type approach. And so to that end, what the board did as part of this process was to develop what we're referring to now, or to propose what we're referring to now, as a set of alignment principles. And you can see the alignment principles shown on the bottom of the slide now. There are three alignment principles. They work in essence in a cascading way. So you first answer the one on the left-hand side, relevance. If you conclude that something is relevant for an SME, you will move on to the next one, which is simplification. Once you've completed the process of simplification, you move on to the next one, which is faithful representation. So talking about each of these in turn, the first one, relevance. The board needs to consider whether or not a particular change to full IFRS is applicable to IFRS for SMEs and whether the costs of implementing that change at an SME level are justified by the benefits that the entity would get. A good example of applying this test would be the expected credit loss model in IFRS 9. We're very aware that this is a sophisticated and very detailed model that requires a considerable amount of judgment. And when we wrote IFRS 9, we intended this particular model, this expected credit loss model, for application by banking entities. And specifically for that reason, within IFRS 9, we included a simplified expected credit loss model that would be available for non-banks. When we discussed this at the board, we considered that given the scope for IFRS for SMEs and consequently and the needs of the users of IFRS for SMEs, we believe that the full impairment model was not relevant to this sector of the market, and consequently we excluded the full ECL model from the suggested changes and only included the simplified approach. So that's a good example of us applying this relevance principle. The second principle is simplification, and essentially this simplification requires us to consider whether or not a relevant requirement of full IFRS can be simplified in such a way as to make it easier to apply, easier to process by an SME. Again, cost benefit comes into the equation here, and in thinking about simplification, we need to think about both the benefits that users of these financial statements will get, and we need to think about the costs and resources that SMEs have. So a good example of this would be the principle of lease term under IFRS 16. Now, lease term is critical for determining a company's obligation under a lease, which in turn determines the amount of the liability. You can't do that unless you can determine how long you expect to be committed to a lease. So clearly from a board perspective, lease term is a relevant consideration. However, we noted from the application of IFRS 16, from some of the questions we've been getting, that lease term has become one of the key judgment points in applying IFRS 16. And this is because lease term as defined in IFRS 16 considers both the contractual terms of the contract and expectations around how that contract will work out. This is appropriate at full IFRS level because of the nature of and relationship with users of financial statements for full IFRS suppliers. But the board considered this was not the case for SMEs, and consequently it would likely be appropriate to simplify the test at the SME level and base it only on the contractual terms of the contract. That would remove a significant element of the judgment that's required while still retaining the core element of establishing what your obligation is. And then the final of these principles is faithful representation. And faithful representation requires the board to consider whether the proposed change to IFRS for SMEs faithfully represents the activities of the SME. Now, on this slide and in our own considerations, we see this as a separate test that is applied at the end of the chain of tests that we've considered relevance and simplification. It brings together everything we've put together as a package and asks whether we think it still faithfully represents the outcome. But we also think that this is important from the perspective of just the ongoing process as we look at relevance, as we look at simplification. So this test actually happens in multiple places along the multiple steps, if you like, as we proceed through the process. So from a board perspective, we think that this approach combines the best of both worlds. It is a robust starting point based on all the research and effort that's gone into full IFRS, combined with a robust process to consider the needs and requirements of users of the IFRS SMEs standard. I think it's also worth just highlighting here that the process doesn't stop here. The board also has to remember that one of the core features of IFRS for SMEs is simple, easy-to-read drafting. Now, we haven't considered drafting as part of the request for information because drafting is something that comes later. Michelle referenced the exposure draft stage. So we'll only really consider drafting at that point, but we have flagged for ourselves that once we've gone through those 3 alignment processes, we still need to think about how we would go about drafting this. So that brings us to the next question, which is that if we are going to be using changes in full IFRS as a trigger for changes to be considered at the IFRS for SMEs level, we still need to consider when we think that that trigger is triggered, if you like, when we think we actually need to start thinking about the process. We've got another on the one hand, on the other hand type of discussion here. The advantage of moving really quickly and making the changes to IFRS for SMEs as soon as possible after an IFRS has been issued is that the alignment between IFRS and IFRS for SMEs will be kept relatively tight. We will have the one following the other quite quickly, and the chances of, or the possibility of confusion arising between the application of the two is reduced. But on the other hand, if we're moving very quickly, the disadvantage is we are only going to have a very limited amount of implementation experience derived from application of full IFRS available to us as we apply those alignment principles. Because every comprehensive review begins with an RFI, the board considered that the important date was the date on which it published the RFI. So looking at this first trigger point that we've got on the slide here, what we're considering here is a circumstance in which we use the issued date as the trigger, and in that circumstance we would say that any standards issued before publication of the request for information should be included in the discussion of the request for information. To pick 3 standards that we've currently got out there, that would mean that IFRS 15, IFRS 16, and IFRS 17 would all be considered for alignment at this stage of the comprehensive review. The second date that we could have picked is the effective date, so the date, whether or not the effective date has occurred before the publication date of the request for information. IFRS 15 and IFRS 16 were both effective before we published the RFI, but IFRS 17 was not. Now, the board on balance felt that this was the best approach to take, and the RFI was determined on that basis. So that was the core basis on which we considered it. The third approach is to wait until the post-implementation review has been completed. Now, typically a post-implementation review starts about 3 years after the effective date of the underlying standard and is completed about 5 or 6 years later. This would mean that we would be extending that period between a change happening at the IFRS level and a change being considered at the IFRS for SMEs level. And in fact, we'd probably be extending it to a period of somewhere between 10 and 12 years. So we would start to lose the benefits that go with alignment of the 2 sets of standards. And so the board, in considering this, believed that this would be too long a period. We also discussed whether some other date might be appropriate. And in the outreach that I've done over the last 6 months since we published the RFI, I've heard quite a lot of people talk about a period that would be 2 years after the publication, after the effective date of a standard. So essentially, if a standard was published in 2018, if the standard was effective in 2018, we would allow practice to develop for 2 years. And if we were then publishing the RFI in 2020, as we did, we would then consider that standard for inclusion or for alignment. That would mean, again, going back to my example of IFRS 15, 16, and 17, IFRS 15 was effective more than 2 years ago, so it would have been included. IFRS 16 was only effective last year, and so it would not be included in the process. And obviously, IFRS 17 would also not be included in the process. So I think that brings me to the 3 questions that we were asking you in the RFI. The first one is, should IFRS for SMEs be aligned with full IFRS, and if so, to what extent? We're asking you whether you agree with the alignment principles, and we're asking you when you think alignment should be considered. So that brings me to an end of the sort of strategic and the general questions issues. I'm now going to hand over to Michelle, who's going to take you through part B, discussing the actual detailed alignment with IFRS standards. Michelle?
Thank you, Daryl. And if you do want to find out a little bit more about the framework and the alignment, we issued a news story on our website, and Daryl has authored an article about the alignment and his views on the alignment. So would suggest, if you want to read that, it does provide a really good overview. So moving on then to part B of the RFI, as Yusuf said, this is the second comprehensive review. In the first comprehensive review, the board decided not to make significant changes. So in looking at the scope of the standards and the amendments that are included in the review, there are a number of standards that were issued before the first comprehensive review that we needed to carry forward and to include in the scope of this review. And then in addition, there are those standards and amendments that have been issued since the first comprehensive review. And I think what you can see from this slide is that there is a very wide breadth of this review. It is quite a significant review, and there are a lot of topics to discuss. So I have a couple of slides that provide an overview. So you recall that as I explained, that in the RFI we have our three types of questions. So the first question is views where the board is seeking views on aligning with IFRS standards, and this shows you the board's position on those standards, where it's seeking views on alignment. Views where the board has decided to seek views on leaving the standard unchanged, so IFRS 14, where the board has decided at this stage not to seek views on aligning. And then a couple of areas where we've got a sort of mixed approach. The amendments to the standards, and those amendments are set out in the appendix to this presentation, where the board applied the alignment principles and, depending on the amendment, has decided whether to seek views on aligning or leaving the standard unchanged. So I am going to now provide a brief overview of some of the standards where the board is seeking views on alignment. And the first one, in fact, is the conceptual framework. So the board has issued a conceptual framework, so it revised its conceptual framework in 2018. And for ease, we're referring to that as the 2018 conceptual framework. And in the RFI, the board is seeking views on the alignment question. Now, there's a bit of difference here, because in the IFRS for SMEs, the conceptual framework has a slightly different status from the status that it has in full IFRS. In full IFRS, it's not a standard, it's outside the body of standards, and it's what the board uses to set standards. And in fact, in the IFRS for SMEs, it's got its own section. And so we would need to think about, if we introduce the new conceptual framework, the 2018 framework, should we update other sections? And we've heard some mixed reviews in the initial stages of outreach. Some people feel that would be going before full IFRS and we should hold on. We're also seeking views on the board retaining the concept of undue cost and effort. So this concept does not exist in full IFRS standards. What it is, it's a concept that allows the board in certain circumstances, and I will demonstrate one of those circumstances later, that the board can say that in these circumstances, if there's undue cost to effort, you don't need to apply this requirement, but you need to make additional disclosures. So that's the conceptual framework and what the board is looking for. And of course, the IFRS for SME standard is based on the board's original conceptual framework. The next topic I just want to provide an overview on is alignment with IFRS 13. So this was a standard that was issued at the time of the last comprehensive review, but the board decided not to update to get a little bit more experience on applying that standard. The board has now completed the post-implementation review of that standard, and the standard is considered to be working as expected. So what we've done is we've said, well, there is a little bit of difference between the definition in the IFRS for SMEs and the definition of fair value in full IFRS standards. We don't think actually aligning would make that much difference, so maybe we should align, and that will bring ease of application to people that are applying both full IFRS standards and the IFRS for SME standards. We're not proposing to increase the use of the use of fair value measurement by doing any alignment with IFRS 13. IFRS 13 is about how to measure rather than when to measure. So we don't think we would be changing anything in that area, but we think we could bring in the hierarchy and tidy up the guidance, and particularly the guidance is set over a number of sections in the standard. So what we feel we could do is bring all of those sections together, and probably within the same section as the conceptual framework, include all the guidance on fair value. So we wouldn't expect a lot of change here. It's really more about tidying up and easing application of the standard. Okay, so moving on to consolidation. The board has issued IFRS 10, and in issuing IFRS 10, the board's aim was to develop a single principle of control that could be applied to a wide range of entities. So prior to IFRS 10, the board had guidance on consolidation of entities that are controlled by voting power, and then consolidation requirements for special purpose entities. The IFRS for SMEs has something similar. It has a principle about control, and then it has some supplementary guidance. And so we feel that if we align, we could have just that one more simplified model, which should help. So in terms of those principles, the board asked itself, is the topic of consolidation relevant? Yes, because we already have a section on consolidation. Could we simplify? Yes, a single model would probably be a simplification. But furthermore, we could retain the presumption that control exists if investor has power over an investee solely from voting rights. So is this simplification that's in the IFRS for SMEs, and we felt even if we updated the definition of control, we wouldn't need to lose this simplification. However, the board looked at the requirements on IFRS for investment entities, and the board felt that given the scope of entities that are eligible to apply the IFRS for SMEs standard, there would be few entities that would need disclosures around, would probably be investment entities. So the board felt that this investment entities exemption failed the relevance test and isn't seeking views on introducing the requirements for investment entities into the standard. So then in terms of faithful representation, the board felt with improving the definition of control, having a single model, retaining the presumption, not introducing requirements for investment entities, it would still have a faithful representation of the group. Okay, so moving on to revenue. So IFRS 15, revenue from contracts with customers, has not been considered for alignment with the IFRS for SMEs previously. So this is one of the new standards that's in the scope of the review. There wasn't really a question about relevance when the board looked at the relevance principle. That was quite easy to move on to the simplifying question. But when we looked at simplification, the board was conscious that although IFRS 15 introduced a stronger and more robust framework for recognising revenue, many of the outcomes for recognising revenue in the more straightforward transactions that SMEs undertake for revenue, the outcomes might not be significantly different between alignment with IFRS 15 and what's already in the IFRS for SME standards. So the board was very concerned about introducing transition provisions and the costs of alignment, and there not being significant benefits. So the board has decided to seek further information here. So this is that third question where the board is asking for further information, and the board has outlined three possible approaches. The first approach would be to try and align Section 23 of the IFRS for SMEs standard, so you would get the same outcomes of IFRS 15. This would probably involve moving some of the guidance that's in the SMEs standard around, bringing in some of the application guidance into the standard itself, but not rewriting the standard completely. Whereas the second approach would look at rewriting Section 23 so it was fully aligned with IFRS 15. It would be a new section. And finally, the board did think, well, possibly we could wait until the next review. So this is one of the areas where the board is asking for further information. Moving on to business combinations, IFRS 3 was carried forward from the previous review, but as I said, the post-implementation review on IFRS 3 is now complete. And when we looked at this standard and we looked at the questions of relevance, we decided that actually this was a topic that was relevant because it was already addressed in the IFRS for SMEs. So what we should really do was look at the question of relevance about the main amendments that had been introduced by the updated version of IFRS 3. And that updated version did seek to address some application questions. So the first thing we did was we looked at the relevance question, and one of the big changes that came about through IFRS 3 was the accounting for step acquisitions, but we kind of thought, we're not sure whether this is really necessary for SMEs. Do SMEs really make acquisitions in different stages? Do they have partial acquisitions where they increase regularly? So the board has said, we'll just ask people if they feel the need for the standard to address the accounting for step acquisitions. Then when we looked at the changes and the improvements that were made to the requirements for actually the accounting for business combinations, we thought on the cost side, the relevance around the acquisition cost and the measurement of contingent consideration were both relevant, and we could introduce them without there being too much cost. And particularly on the measurement of contingent consideration, we thought that, okay, this would be a circumstance where we would be introducing more fair value measurement, but we could also have use the undue cost and effort exemption that I discussed under the conceptual framework, and we could say if measuring contingent consideration at fair value would create undue cost and effort, then you could use the exemption. And the board also felt that it could bring forward one of the amendments it's issued to the standard as a result of the post-implementation review, the definition of a business. This amendment sought to address some application challenges, and the board felt quite strongly it would be useful. So on the alignment questions, the board felt it could align the cost of the acquisition without bringing in without causing undue cost and effort, and that it could bring in some simplification. However, when the board looked at how you fair value the assets and liabilities that have been acquired as part of the business combination, the board felt actually introducing and changing the recognition requirements for intangibles could introduce more complexity into the standard, and it decided not to seek views on introducing these requirements. When we stood back and we looked at the decisions that the board had made about aligning the cost of the acquisition, but not aligning for the requirements regarding intangible assets, we didn't think that this hurt the faithful representation. And the reason we felt this was because there is a difference between the IFRS for SME standard and full IFRS standards. The IFRS for SME standard has a amortization of goodwill with impairment approach, whereas full IFRS standards has an impairment only approach. So we felt any intangible assets that hadn't been separately recognised as part of the acquisition would be consumed within goodwill, and therefore they would be subject to the annual amortization charge. So this was a bit of a mixed approach, but we felt overall that we would get faithful representation and that a user would get a better understanding of the cost of the acquisition. So I'm going to move on to financial instruments. And we are often challenged about how we sought to simplify IFRS 9 because it is a big standard to address. So what we did was we looked at topics separately. We looked at impairment, we looked at classification and measurement, we looked at hedging, derecognition and own credit risk. And I think on impairment, Daryl has already outlined how we thought not about not introducing the expected credit loss model, but perhaps introducing the simplified model, and we're seeking views on that simplified model. For classification and measurement, the IFRS for SME standard at the moment uses a list of examples to support how to classify instruments. And what we felt was actually IFRS 9 has a model, has principles for the classification. So what we could do is we could add a principle to the standard, but we would add that principle under the examples. So an entity would approach the standard just as it has in the past, look at the financial instrument it has, look at the examples, and if the instrument falls within the examples, then it would apply the exact same approach. However, if it's got an instrument that doesn't fall within those examples, it could use the principle. So we felt quite strongly that this would help ease implementation and application of the standard. One of the things the board also had to address was the Q&A. So as Yusuf mentioned earlier, the SMEs issues answers to questions it received. During the period between the first and second comprehensive review, the SMEs has issued a question or answered a question on issued financial guarantee contracts. So this is where one entity guarantees the liabilities of another entity. And the IFRS for SME standard doesn't have any requirements at the moment, and it doesn't include a definition. So the Q&A requires at the moment that these instruments are measured at fair value at each reporting date. But the SMEs had suggested that the board consider this approach. So the board did that, and what the board decided was to seek views to ask you about aligning the accounting for issued financial guarantee contracts with IFRS 9 and to introduce the definition of a financial guarantee contract. As I said, there were two topics that the board addressed. Own credit risk, where the board felt actually this didn't pass the relevance test. This was unlikely to be relevant to entities applying the IFRS for SME standards. So that we are not seeking views on that topic. On derecognition, the requirements were carried forward from the previous standard, so not seeking views on that topic either. And then finally on hedge accounting, the IFRS for SMEs allows hedge accounting for certain types of risks. And there was a question about how often hedge accounting is used by SMEs, and therefore should we retain those requirements? No, not talking about changing the requirements, just asking, should the hedge accounting requirements be retained in the standard? And then finally, the board is requesting further information on what we call the fallback. So the IFRS for SMEs has just one fallback to full IFRS standards, which is that an entity can apply the recognition and measurement requirements of IAS 39 and then the disclosure requirements of the IFRS for SME standard. Now, we kind of have two questions here because we'd really like to know how often that fallback is used. We don't have any data points on how often the fallback is used, so we'd like to find out a bit more about that. And then, obviously, IAS 39 has been superseded by IFRS 9, so we would like also to find out whether people think we should update the requirements. So that was how we applied the principles to IFRS 9. And then finally, I think Darryl has already spoken a little bit about how we applied the principles to the leases standard. On the question of relevance, we could cite academic literature that explained the important source of leases as a source of finance to SMEs. We felt the relevance was addressed. Simplicity, we considered that a single model for accounting for leases was simpler than the current dual model. Furthermore, we noted that there are some exemptions for low-value assets and short-term leases in IFRS 16 that we would carry forward. And then we looked again whether there were other areas we could simplify. And the two simplifications that we considered were the discount rate. So we felt that if an entity couldn't evaluate or determine the interest rate implicit in the lease or its incremental borrowing rate, then actually maybe it could use a discount rate by reference to high quality bonds. We also felt we could simplify the definition of the lease. At the moment, the definition of the lease, or applying IFRS 16, the definition of the lease requires judgment about the expected period of the lease, whereas actually possibly what we could do is to refer to the lease arrangement and use the term that is defined within the lease arrangement. However, in doing that, we noted that in terms of faithful representation, there would need to be a balance, because we wouldn't want people to adjust lease periods just to achieve an outcome. So that is what we're doing on leases and how we got there in terms of faithful representation. And then the final standard I was just going to talk about is IFRS 11 joint arrangements. Now, IFRS 10, as I said, introduced a single model for control and has a definition of control. Now, that definition of control is obviously linked to a definition of joint control. And we noted that if we were to update the definition of control to align with IFRS 10, we really needed to update the definition of joint control. However, the board was very conscious that the post-implementation review of IFRS 11 is not complete, and that the IFRS Interpretations Committee has addressed a number of questions about the categorization of joint arrangements. So the board felt what it could do as a first step would be to update the definition of joint control, so align the definition of joint control, but then retain the three categories of joint arrangements that are currently in the IFRS for SMEs, so jointly controlled assets, jointly controlled entities, and jointly controlled operations. And the board is seeking views on that. Retaining those three categories of arrangements would mean that we could keep the current accounting requirements that are in the IFRS for SME standard, and particularly keep the policy election around the use of fair value equity method for jointly controlled operations. So the RFI, as I said, seeks views on standards that are being aligned. It seeks views on standards where we're thinking about partially aligning IFRS 11 and the amendments. And finally, it seeks views on about how we could align with IFRS 15. So that is a very quick overview of Part B of the request for information, and I'm going to hand back to Yusuf, who is going to address Part C.
Thank you, Michelle. Part C is the final part of the request for information and looks at new topics and other related matters. On IFRS 14, the board noted that whilst there might be SMEs that have regulatory deferral balances, IFRS 14 is subject to review at the moment, as the board has a major project on the way, and we expect to issue an exposure draft in the latter part of this year. That exposure draft would replace IFRS 14, and the board felt it would be inappropriate to update the IFRS for SMEs for what could be a temporary update. So the board is seeking views on not aligning with IFRS 14. Moving on to cryptocurrency, the board has considered this topic in full IFRS and decided not to undertake standard setting for holdings of cryptocurrencies because it was not prevalent among IFRS reporters at the time. However, we felt we needed to test this assumption for entities applying the IFRS for SMEs, particularly because the staff research indicated that some smaller entities in some jurisdictions have holdings of cryptocurrencies. So this is an area where the board is requesting further information. What the board is actually asking is, do entities that apply the IFRS for SMEs need guidance for cryptocurrency and issues of crypto assets? And then the request for information is asking for a little bit of information about the application of defined benefit obligation simplification in Section 28 of the IFRS for SMEs. Section 28 includes some simplification about measurement of the defined benefit obligation, where you can use the simplification, and there is also some relief for undue costs or effort exemption. However, the board received some feedback that the simplification is not clear, and some found it difficult to apply. But information from the SMEG suggests that very few entities use the simplification. So the board is requesting further information on whether the simplifications are applied regularly, and if so, what difficulties arise in applying the simplification. This information will help the board decide whether to retain the simplifications or remove them. And then we are asking two broad questions on what you are experiencing and what the board needs to think about. Given that we only get to hear the SME voice once every 6 years, your input on what's working and what's not working in the SME space is very important. First, we are asking, is there anything else that we have not covered which you think we should cover? So we're asking you for advice on whether we should pick up on anything else that are important. Second, we are asking, is there anything else at all that you would like to bring to our attention? So anything out there that the board hasn't thought about in terms of not just changes to the IFRS for SMEs, but perhaps in a broader context in the way we operate in this space. We had some feedback about borrowing costs because full IFRS standards require borrowing costs to be capitalized as part of cost of the asset, whereas for cost-benefit reasons, the IFRS for SMEs requires such costs to be charged as expenses. This is an area where you can respond to the board if you have any issues. That brings me to the questions we are asking in part C of the request for information on the matters I mentioned on the previous slide. Next, I will explain how you can respond to the request for information. The board's aim is to get a balanced view by consulting a broad range of stakeholders. However, we understand the limited time and resources available to stakeholders. On the next two slides, I will talk about the innovative approaches we are trying to encourage you to get involved in the second comprehensive review and improve responses to the request for information. There are three ways you can respond to the request for information. The first question is to ask, do you already have an existing process in place for submitting comment letters? If yes, we strongly encourage you to submit a comment letter. From our perspective, comment letters provide the most persuasive evidence we receive because they explain the rationale for supporting or not supporting their views in the request for information, and in some cases suggest alternatives. We prefer electronic version of the comment letter that can be uploaded on our website or sent to us by email. Having said that, we also accept a paper copy of the comment letter that's posted to us. Now, if you haven't previously written a comment letter, but you do have the capacity or resources to submit a letter, we put something second in place, the optional response document. It is a Word document that reproduces the questions in the request for information and provides the template for you to fill in the answers. It will still be treated from our perspective like a comment letter. You can download this from the project page on our website. If you choose to use this document as an alternative to a comment letter, we ask you to convert it into PDF before submitting via the comment letter link on our website or send to us by email. Now, if for various reasons you cannot or don't want to submit a comment letter and the optional response document, then the third way to respond is to complete the survey. The survey is anonymous, so it does not carry the same level of persuasiveness that the comment letter does, but it provides us the opportunity to get a lot more information from a broader audience as anybody can complete the survey. You don't have to answer or comment on all the questions in Part A, Part B, or Part C of the survey. You have the option to skip the next section where necessary within each part. It is an experiment. We haven't done a survey like this in the past. We encourage you to submit the survey if we haven't heard from you in the past. We would provide a feedback summary of what we heard through the comment letter process and throughout outreach process, and then separately an analysis of what we heard from the survey. The request for information is open for comment until 27th of October 2020. Finally, we have developed an online survey to help the board understand the information needs of individuals or institutions that use the financial statements of small and medium-sized entities. We recognize the importance of reaching out to users. We are doing this additional outreach because of the limited response from users of financial statements of SMEs in the first comprehensive review and the difficulty to reach out to users. The survey has two parts. Part A contains questions on the framework the board developed for the comprehensive review of the IFRS for SMEs Standard. It's pretty much those questions in Part A of the request for information. Part B of the user survey contains questions on the broad principles that guided the board in setting the IFRS for SMEs Standards disclosure requirements. Feedback from the user survey will help the board in updating the disclosure requirements of the IFRS for SMEs Standard. The survey is available until 27th of October 2020 when comments on the request for information are due. If you are a user of SMEs financial statements and would like to participate in the user survey, please get in touch with us and we will be more happy to send you the link to complete the survey. I'll hand over to Michelle now for the Q&A session.
Thank you very much, Yusuf, for that overview of the how to respond to the survey. I think actually you have answered one of the questions, Yusuf, that we've had in, which was about how you can get hold of the survey. So please do contact Yusuf or myself and we can send you a copy of or the link to that survey. And then in terms of other questions that we have received, we have, let me just have a look, I seem to be losing the questions here. So we have a question which relates to IFRS 9. So the simplified approach to impairment is applicable to short-term debt instruments. Is the staff thinking that it's reasonable to apply this instrument to long-term debt instruments, and this would result in lifetime expected credit loss? So in IFRS 9, the simplified expected credit loss model is required when an entity has trade receivables, lease receivables, and one other. And what the board is seeking views on in the RFI is about using this simplified model, which is a full lifetime model, to all the financial assets. I was actually discussing this question this morning with a colleague of mine, and we were trying to think of, for most SMEs, what kind of other instruments, financial assets, that they would have that if we introduce this approach into the IFRS for SME standard would be most typically affected. And the only thing we could think of was possibly in most instances, there being long-term intercompany balances. So this is a request for information. If you don't agree with the approach, it would be good if you could set out why you don't think it's applicable, and also the nature of the financial asset that you feel that an SME entity would be holding that would be subject to these lifetime expected credit losses.
Michelle, if I can come in on that one as well. I think the assertion that's being made here that in fact, if you apply the simplified model to long-term instruments, you do get what is in effect a lifetime ECL is correct. And I think your comment there is very valid, is that in thinking about this, the board again had to weigh up, I guess, two things. On the one hand, the significant simplification benefits that come from not having to include the ECL model in IFRS for SMEs. But on the other hand, the fact that for those limited number of companies that do have these long-dated instruments, this will at the outset or at initially potentially overstate the effect of the impairment. And I think where the board landed was the view that the simplification was the predominant argument. We felt that was the more valid argument. But I agree with you, it'd be very useful for us to get additional information on this one and perhaps insight during that process into the types of companies that are applying IFRS for SMEs will also be very useful for us.
We don't have any further questions in the inbox at the moment, but Yusuf, I just wondered if there was anything that you might like to raise, anything that you've heard through the outreach you've been undertaking so far.
So I guess a couple of things from my side. Sorry, were you asking me or were you asking Yusuf?
Well, I was going to ask Yusuf and then you, Daryl, but either way, why don't you go ahead now? Okay,
let me carry on then. So I think there are a couple of important things that certainly have been coming back at me. I mentioned the discussion around, in my earlier presentation, around which core approach we should be following at a strategic level. I think we've had a lot of different feedback on that topic and a lot of mixed feedback in terms of how people are thinking about it. And so as you did, Michelle, I urge people to read the article that's on our website, because I think that tries to capture the argument and just present both sides of it, perhaps a little bit better than what we seem to have done in the RFI itself. A useful read, and I think it might help people understand the topic. The other topic that we had asked of us in the session that we held this morning that I thought was really a useful question was just how if we did go down the independent standard approach, how that would affect comparability between full IFRS and IFRS for SMEs. And as I mentioned as I touched on in my discussion, we believe, at least from a board perspective, that you will over time progressively lose the ability to be able to compare the outcome of those two. So I think, again, particularly for investors or users on this call, it will be very useful to understand from you how important you think that comparability actually is. Whether in looking at IFRS for SMEs numbers, you're considering the broader context of the industry and want to be able to understand those SME numbers in the context of other companies that might be reporting IFRS results. Last one that I wanted to bring up that I think is an important question that I certainly heard is the question of scope of IFRS for SMEs. The board chose not to talk about scope in the RFI because we had understood that this was a discussion that we went into a lot of detail in the first comprehensive review, and nothing that we had heard subsequent to the first comprehensive review indicated that there was a change in view on scope. We did touch on it in the accompanying documentation just to make sure people understood where we were coming from in not raising it as a specific question. But certainly in the outreach I've been doing, I've been hearing this issue raised a little bit more often. And so that might also be something for people to consider. And in particular, that's the idea of broadening the scope so that companies outside of the currently limited companies, specifically the limitation on public accountability, so that some perhaps small banks or small insurance companies, or maybe even small listed companies would be able to use IFRS for SMEs. Michelle, I think those are probably the core messages I've heard, certainly.
Thank you very much, Daryl. And Yusuf, do you want to give an overview of what you've heard?
Yes, so a couple of themes that we heard during outreach is first is on the application of the undue cost and effort. So some stakeholders raised comments in terms of the difficulty of preparers to apply the concept. And then the second thing we heard is about the conceptual framework, where people were raising points about if we align the Section 2 with the 2018 conceptual framework, it might lead to inconsistency with the existing sections of the IFRS for SMEs. So what we are looking at the moment is we're trying to identify if there will be inconsistencies. So we're doing a bit of analysis on this. So this is an area where we would encourage people, if they do, they are aware about any inconsistency, to include that in their comments. And then there is also this broad comment that we heard during outreach is if alignment will result to complexity of the IFRS for SME standard. But we wrote and we published a recent article on alignment where we explain exactly what we mean by alignment. So by alignment, we don't imply we're going to do a copy and paste of full IFRS into the IFRS for SMEs. So if we take the example of IFRS 9, for example, we're not going to copy paste IFRS 9 into the IFRS for SMEs. So we will be applying these three principles. And then we also have the simplifications. So when we look at how the IFRS for SMEs will look like after amendments, if we align, we don't think it will be a significant change in the standard. The same thing for leases, because what we will do with leases is we will just have the finance lease model, get rid of the operating lease model, but we will not kind of rewriting the whole of the standard. So I would encourage you to read the article on alignment to have a feel of where we are going into the debate.
Thank you, Yusuf, and I think that really is a good overview of some of the feedback that we have been receiving. We don't have any new questions, so my suggestion is that we will end the webinar. Before we do, I just want to highlight again the resources that are available on the website. So as Yusuf pointed out, there are lots of resources available to support the IFRS for SMEs standard itself. And in addition, we've made resources available for the request for information. So there's a snapshot available that provides a very high level. There are the optional ways to respond to the document, and there is the article that we published last week. So with that, I would like to thank you all for joining us today and for your participation in the webinar, and to say thank you to Daryl and Yusuf for their presentations today, and to say we look forward to receiving responses to the second comprehensive review. Thank you very much.
Thanks, Michelle. Thanks, everyone.
Thank you, everyone.